All right, welcome back to the program. Dr. Mahmud is here with me, Dr. Hassan Mahmud, the Director of Monetary Policy Department at the Central Bank of Nigeria. Doctor, good to see you again. Welcome to the program.
Good morning.
Now, just before I come to you, let's take a bit of what the Governor of the Central Bank said yesterday. The Q&A session, that is where really the cocoa is sometimes, because that's where for those of us that are there, you would ask the questions that are pertinent to be answered, and the governor answers. So let's just take a listen a bit, and I'll come back to Dr. Mahmud.
If you recall, from our standpoint, we granted the forbearance regime from just two areas. One, primarily had to do with the fact that we said that all loans that people, companies and businesses that are impacted adversely by COVID-19, that they should be given about 2 years. We first of all started by saying 1 year from 2020 to March 2021, and by February 2021 we extended it by 1 more year when the third strain of the virus pandemic continued. We extended by 1 more year, making it 2 years that will expire by March 2022. So 2 years moratorium was one aspect. Another aspect had to do with the fact that we said for CBN interventions that there is a need for us to reduce the interest rate from 9% to 5%. Indeed, another aspect of the intervention forbearance is that because we knew that the adverse consequence of COVID-19 was resulting in a reduction in the revenue generating capacity of businesses and companies, we also granted the banks an opportunity to allow their customers to ask for a restructure of their facilities. Maybe if it's a 2-year facility, extend it to 4 years, a 4-year facility, extend it to 6 years, a 6-year facility, extend it to 8 years, so as to reduce the impact or the burden of the cash flow on them. At this time, we believe, and those were the periods when there was an unprecedented lockdown of the global economy. All countries, with no exception, were on lockdown. Travels came to zero. People were not allowed to leave their homes. And in Nigeria, this persisted for at least about 3 to 4 months. Now, since from around September, October 2020, Nigeria began a process of easing the lockdown. And notwithstanding the fact that we still saw that around February, March of 2021, that the Delta strain now reared its head, we still said that these businesses should have this forbearance. At this time, we believe that the global economy has opened up. The lockdowns have been lifted, and of course we know the casualties, the economic damages and fatalities that was caused as a result of the lockdown. And I'm so sure that not too many countries, if at all, will, in the midst of this pandemic, want to embark on a wholesome lockdown any longer. Particularly because most countries are all administering vaccinations that they think should assist in reducing the impact of the strain of the virus. So we believe in Nigeria, businesses are back, companies are back to business, revenues have improved, and if revenues have improved, then companies or businesses that took loans, if we say the loan for intervention move from 5 to 9, if we say that the moratorium of 2 years expires in March 2022, and of course the restructure that you have graciously benefited remains, then naturally we should expect that companies should be able to pay back their loans.
Okay, welcome back. That was quite important and instructive, especially to those individuals as well as businesses that took advantage of the COVID loans for households and targeted credit facility for businesses. So you should take note of that. Those monies given to you last year is not national cake and is not a slice of the government money. You've got to return it. I think in simple terms, that's what it means, but from next year. Dr. Mahmud, can you just, should we take it from that?
All right.
Yeah, let's just take it from this point because it's very instructive.
Yeah.
Nigerians don't think, oh, they've seen the national cake, that's the part of their national cake, or CBN should forget the money.
Yeah.
You know.
Yeah, I think it's very important because the forbearances were a product of the impact of the COVID on businesses and banks and the need to, and the vulnerability that was building up within the system. And there was a need to give, some breathing space for those businesses because businesses were closed. People were not going to work. So we'll start seeing, them not able to meet their own, obligations and are not able to pay back their debt. So those, leeways were given. Now economy have picked up, we had other interventions that are supposed to support businesses, TCF, AXMEs, they were all going on in the last over 1 year. So most activities have picked up. We're seeing that in the indicators that we just recorded, GDP and all other numbers and the inflation number that was coming down. So now that we've got to a kind of a quasi-stable situations, the banks need to continue their businesses. These loans need to be paid back to be given to other people because it's going to be a rolling thing. The more people get to pay back, the more people are able to take a new one. So like you said, it's not a grant, it's a loan. It's supposed to drive production and productivity. And as you get your output, so you start, amortizing on this loan and paying back the facilities. The BVNs and other KYC information are with the central bank, and the NISA bank will also follow up on how to do those recoveries.
So what this means, let us explain it in simple terms, especially for those now, perhaps they didn't get what you just said, that the BVNs and KIC informations are with the Central Bank of Nigeria. What that means in essence, let me break it down for all of you to hear. For those of you that took the grants, that took the loans for individuals and businesses, you are not running anywhere. That's what it means.
Yes.
That's what it means.
Yes, and since you're in the banking system, we have our GSI, we have other parameters on ground. So if you think you're dealing with NISA and you can run to UBA or First Bank and put your money there, we're seeing everything. We'll pull it from there.
Pull it from there.
Yes.
So the best thing is to pay back.
Yes, yes. And for the other facilities, there are other there are provisions, that you can also pay in kind. For those that are related to agriculture, you can use your proceeds to pay. So it's very soft, in the sense that the bank has ensured that people really benefit from this, and these benefits impact on their disposable income and their ability to sustain their businesses and also move forward towards other businesses that are within the economy. So given all those favors, I think it's important to just pay back the system with integrity, such that you are seen to be meeting up to your debt amortization obligations in terms of paying as at when you are not paying. There's a timeline of paying it, so you follow that sequence.
Timeline.
Yes.
And if, in case you even pay back, there's also an opportunity. If you pay back the one you had, you can take another one.
Yes, you can take another one. Yes.
How about for those? I must also say that there's a caveat there, because this forbearance is for those that took the loan like 1 year ago.
Yes,
because there are some people that are still taking now, or they are still in the process of being paid.
Yes. Even those ones, they also have time where they are supposed to start repaying back. You don't take the loan this month and start paying back next month.
So this one doesn't affect them.
When their own time is also due. Every loan is individual, in the sense that it has its own terms and structure and tenure of payment. So that tenure of payment applies to individual loans. It depends on when you take the loan. Those that took earlier, 3 years or so back, because they are due to pay like a year back, for the forbearances or the amortization, the extension of the payment period that was given to them, they move to this year or early next year to start paying. Those that are taken now have their own timeline, which will not be as long as that, because that space is not given that economic activities have already picked up.
Did I just get you now? So
for
those that are taking
for
now,
example, somebody took a loan in 2020 or maybe 2019 actually. COVID, hit the system in 2020. Businesses were closed 5, 6, 7, 8 months. So those facilities that were due in 2020 could not be paid. So those were rolled over, to 2021, some to 2022. So those will start getting due by 2022. Those that took, for example, in 2021, they also have their tenure of when to start paying back. It's in their...
So their tenure starts from when they take the loan?
Yes. When they take the loan, in that loan, there are specifications. You took this loan, this is the interest margin, this is the principal, you start paying back at so month, and this is our monthly installment that you need to pay. And this is when you're supposed to pay off the entire loan. So you have that agreement in the contract of signing that loan. Okay.
Thank you for that explanation. We needed to take it off from there because it's very important. I didn't want it to just slip
away like that. It's important.
Yes. Okay, let's talk about the 6th and the final MPC meeting for the year. How did you and your colleagues, the governor, the DGs, the 10 members were in attendance, all of them. Was there a sigh of relief at the end of yesterday's meeting that signaled that is the end of the 2021 MPC?
Well, in terms of the meeting, yes, there was a sign of relief. In terms of the economy, the governor also emphasized that, yes, we saw a very positive outcome. We are happy with what we are seeing. And it's giving us that optimism that the policy tools that they boldly took, because there are a lot of debates around whether that was the appropriate approach, particularly using the unorthodox methods of addressing the issues on ground. It was like a vindication now that yes, those decisions that we took, with some risk, are now crystallizing into positive outcome. And because of that, there are some comfort in terms of the efficacy of the policy tools that have been used. However, there's also the caution that developments around the globe there are still uncertainties, both in terms of the COVID, both in terms of the growth, global growth output, both in terms of demand. You also mentioned issues around petroleum prices now. So you see those all externalities going on. So we shouldn't be sacrosanct. We should, one, consolidate on the recovery we're seeing. We are still below the 2018 GDP numbers. We are still, inflation numbers are also going down, but if you look at it against the 2016, 2015 numbers, since we started picking up in terms of inflation that picked up for more than 19 months, now we've seen consistent 6 months decline in inflation. GDP is already picking up to above 2%. If you look at the GDP numbers, quarter on quarter, the growth is a lot stronger than what we had in the previous quarter, given that the previous quarter was significantly reduced by the base effect. Now you see about over 11% growth in Q3 from Q2. So if with that projections, the bank also said that we are likely to get to 3 and over 3% GDP for 2021 annualized. So those are optimistic development. The banking system was also very good. The capital adequacy ratio, the NPL numbers are coming down, even though credit is growing. So you see that the credit management mechanism is quite robust, and the banks are also making some good returns in terms of being able to continue their intermediation role within the economy, because we still need that going forward. We still need a lot of credit to drive the economy. The output gap is still very large, and the unemployment level is still up there, so we need to narrow that down. Inflation numbers are also supposed to come down to single digits or close to single digits. So you still have that threshold to meet. However, the trajectory is quite good, is positive, and then gradually we'll get to that stage. So yes, members are happy that yes, they can go for their Christmas and New Year with some sense of fulfillment, but they know that they'll come back in January and start seeing what are the new challenges, what are the fundamentals of the economy that they need to also address.
Okay, 2 questions from what you said, and let me take it the first one. The CBN or the MPC seeing a 3% growth at the end of this year. Yesterday at the World Bank Nigeria Development Update that was released, time for business unusual. I urge everyone to go get that report and read it. The World Bank predicted or has said that Nigeria's economy will grow, I think, about 2.7% this year. So even for the CBN, MPC, and even the federal government, because even Zainab Ahmed did say yesterday, faulted the World Bank yesterday and said, this year 2.7, we're already even at an average of 3.18 already, just for the 3 quarters. Why are we having that optimism that at the end of this year that the economy will grow 3%? On what are the parameters that the MPC is looking at or the CBN is looking at?
We're looking at, by the 3rd quarter, you have already done 75% of the year. So you see your projections. We see how consistently the growth improvement is increasing, at a particular rate. And we know that the 4th quarter we end very well. One, harvest is going to come into that space. A lot of the interventions that have also taken place are also crystallizing, and so the projection, if you've reached 75% of your calculation trend, the probability of you getting an accurate measure is also close to 1. So, and the numbers are with us. The World Bank will also look at other parameters that they think will shock the economy and derail that process. So even the IMF also have its own estimates. They have their different models of doing those estimates. There's no need to worry about questioning those models. What is important is what is the end outcome of that. So the projections are model specific, analyst specific, in the sense that it all depends on your understanding of the key parameters that you are looking at. It also depends on the granularity of the data that you have to be able to make those projections. The central bank is quite certain that given this trajectory, we are most likely going to land at this place, ceteris paribus, all things being equal, that there's no any major shock that we truncate this trajectory.
So if we grow at the end of 2021 at 3%, we're just like a few notches higher than population growth, which is at 2.6%.
Yeah.
Which, if you take a look at it on an aggregate or just a normal or a face value, it's not so much growth.
It's not so much, but you will start seeing per capita income picking up for the country now, because the more your GDP numbers are above your population number, so is the per capita GDP, because is the denominator is the GDP and the population is up there, and that is just a measure of the level of development or income level in an economy. What is also important in that per capita GDP is the distribution. That is what the CBN or MPC policy is facing at. How do you get the largest population of the economy to benefit from that income growth, participatory growth? And that's why we're inclusive growth. That's why the emphasis is on small and medium enterprises, agriculture, miniature manufacturing, and that's why we have the largest population. Services, where you have a lot of the youths that have a lot of skills that need to be developed. Access to credit or facilities is quite difficult for them. There's collateral level is quite shallow, so these interventions are supposed to de-risk that sector, and you start seeing a large number of people having access to that. So getting the largest number of the population benefiting from the growth numbers is what is important in driving the entire ecosystem. So while we are looking at per capita GDP, we'll also be looking at income inequality within the system, how the employment numbers are hitting, and that's why hitting the rest of the economy, and that's why the emphasis has always been move away from the capital intensive oil sector, because the backward integration of oil is lower, and go to the it's a labor intensive economy. We are trying to use technology and other digitalization to modernize that, which is an ongoing process. However, the reality of now is that it's a labor intensive economy. So whatever you're going to be doing should take this large number of people on board. Okay.
The other question I wanted to ask is about the banks. You did mention earlier about credit from the banks to businesses improved.
Yeah.
Okay. If we take a look at the CRR, which was also retained, 27.5%, it's also been argued that banks may not have so much space to lend, because whatever out of 1,000 naira, they are keeping 217 naira 50 kobos. Or yeah, I guess that's it. Or yes, that's it. 100 naira, 27 naira 50 kobo of it. So there's no space really for banks to lend.
We gave a window in that space in the event that banks can also have access to their CRR. If you have projects in the real sector, those that can impact on growth and employment, come and touch your CRR. The central bank gave that window for banks to do that. However, it will be affecting our monetary numbers if we leave large liquidity in the system that is not going to the rest of the economy. One, it will bring down rates at the money market. Two, it may feed into inflation that is monetary induced, and then it's also going to be higher cost for central bank because we have threshold of liquidity that will be in the banking system. So as long as liquidity is more than that threshold, we need to mop that up by issuing OMO bills, and that OMO bills comes with interest, and those interests will be paid to those that are holding those certificates. So you see, the cost of liquidity management will now become a lot higher. Managing the liquidity in the system will also mean that some of those excess liquidity will go and hit exchange rate, or exchange demand will boost exchange demand, and we start seeing depreciation coming in. That also could translate to inflation if other things are added to it. So it is important that we also understand that yes, even though there's an explanation that yes, there's no money in the economy and stuff like that, there are also issues. We look at the banking system liquidity as money, the deposit balances with the banks that are not lent out for people to do businesses. Banks have their risk profile. They have sectors that they will want to go to. It's only moral suasion that central bank can do to tell them go on, because they are private businesses. So they decide this is what I want to do. You can't, so long as they comply by your regulations and your regulatory requirements and your prudential threshold, is their choice. However, we also have that social responsibility to look at how our businesses impact on the economy, so that it's just not profit maximization alone. You also look at welfare maximization. So banks will be persuaded, okay, go into agriculture, go into SMEs, go into services. Some of them are already creating products that are really very, profitable for them in those sectors. Some banks are expanding significantly in agriculture because it's along the value chain. If you don't go into reproduction, you can go into storage, you can go into packaging, you can go into distribution, or go semi-finished goods now. So we have that on ground, and then the need to keep, and that's why we also did the LDR, so that 65%, so that a lot of those deposits that you are picking, deposit money, are invested. But don't forget that they also have shareholders, so as they are looking at return on investment and return on equity, they are also looking at the sustainability of those businesses.
Okay, I think we are just too technical now. Let's bring it a bit.
Can just break it down.
So let's bring it. Let's break it down.
Yes.
What's the impact of this MPC decisions, or at least the ones we've seen this year? We just saw a surprise cut. I think we saw a surprise cut. Was it this year or last year? Can't even remember. From 12.5% to 11.5%.
That was just the beginning of the COVID.
Yes, it happened.
Yes.
So what's the impact of this decision now, where we have landed finally, on investors or savers? What's the impact really?
One for the investors, they see some level of certainties in the trajectory of the MPC behavior. They relate that to the economic fundamentals. How is what we call, I don't want to be technical now, what we call the measures of economic performance, which are looking at the GDP growth,
the macroeconomic fundamentals.
You are going
okay, all those things,
so
like
all those things that tells you,
how the economy
is doing,
GDP,
whether it's doing
inflation,
fine. Yes.
All those things.
So they look at those fundamentals, and they look at the behavior of the monetary policy or the central bank in terms of decision they take. It is very important that those decision processes are consistent with the facts, or with what the people or investors are seeing. Those decisions are also to manage investors' expectation, because those investors expect, that's what we call inflation expectation. What you think inflation will be, you take a position now. What you think exchange rate will be. So those expectations, you need to manage them now, so that people get that certainty that yes, the way these things are going, by this time, this cannot go beyond this. So I will release my things to businesses now, I can still sustain it over this period. So that expectation is very important. Those policies are also to give forward guidance. Now that Central Bank or Monetary Policy Committee is holding, we've had like 3 consecutive MPCs now that they are holding, and they are looking at the performance of the economy, and they give those explanations after every MPC why they took those decisions. So by the time you also start seeing the economic fundamentals changing, you will start thinking that, okay, since these guys were consistent over this period because of this, as this are coming up now, then there's a likelihood that this will happen. So regardless of what the MPCs are thinking, the investors and the public are also doing their own thinking. So it's important that we assess, and that's why we do business survey, market survey, to know what I think the performance managers index that we have in those reports is just a survey of what are the manufacturers thinking, what are they looking at in terms of inflation, in terms of GDP, in terms of monetary policy, and that is what determine whether they expand their businesses, or they hold, or they take more people on job to so all those simple things are important in the entire ecosystem. What is important now is, yes, the numbers are looking good, but there are still fragilities in the system. If you look, even if we get 3.0% GDP in 2021, if you look at years before that, we're doing 6, 7, 8%. Some other economies have already gone to 4, 5%.
Singapore,
US,
7%.
Yes, so there's still a lot to be done, and there's still a lot of poverty reduction that this growth is supposed to bring. There's still a lot of employment generation that this is supposed to be. Inflation needs to still go down further to make sure that the value of the increased income is consistent with the
and that is not eroded by inflation.
Yes, because that's the essence of the inflation numbers.
Dr. Mahmud, we have a lot to talk about, but time cannot permit us, really. We've almost come to the end, but let's take this final question, which is, as we go into the new year, you made mention of inflation expectation, and let me hinge it on that. What should Nigerians take away? Are we going to say 2022 that would also be high inflation? By the end of 2022, God willing, would also still be here. What should Nigerians expect moving ahead into 2022?
Nigerians should expect that if the fundamentals, when I mean fundamentals, if the things that are going on now, persists positively, then inflation numbers should be going down further. That is, if security challenges are significantly abated, if production of foods and goods from the hinterland improve significantly, if the road network, infrastructure facilities that will enable delivery of those to the urban areas and markets are also being improved. Government is also spending a lot in those areas. So if you see a conglomerate of those positivities, then you expect that, yes, this performance will continue. GDP will continue to increase, inflation will continue to go down, employment level will continue to pick up, and you see better standard of living for the rest, including power availability and consumption, electricity consumption, electricity availability, the transmission. So it's a lot of things are involved there. So the expectation should be more of being cautiously optimistic, but engaging in economic activities to support that optimism.
So we should end on a cautiously optimistic note for 2022. God willing, we'll see again in January. That's the next MPC meeting. MPC meetings are held 6 times in a year. January, March, May, July, September, November. Oh, I got that.
Good. Very
fantastic.
Good. Very good.
So those are the 6 times within the year that MPC is held. Thank you, Doctor. I wish you a good year, in case we don't see before Christmas.
Thank you very much.
Wish you
Merry Christmas,
and Happy New Year.
Thank
All
you.
right, that's the much we can take on today's edition of the program. I've been speaking with Dr. Hassan Mahmud, who is the Monetary Policy Department Director at the Apex Bank. That's the Central Bank of Nigeria. Be the best you can be the change you want to see. I am Nancy Naji. Don't forget to go on our website as well as on our YouTube channel and watch series, at least that we've had this year, so that you better understand all this English and grammar. I'll see you all again tomorrow. Bye now.